This is The Bottom Line. The Bottom Line on 938 Live.
Now, an increase in sales tax from 5 to 8%, resulting in a drop in consumer spending and inflation going nowhere. That's the big theme influencing the Japanese economy and how their government have crafted policies this year. For 938 Live's Year-Ender series, Travis Teo has the story.
By most accounts, Abenomics failed to live up to expectations. The economic strategy was named after Prime Minister Shinzo Abe and his three-pronged approach of massive fiscal stimulus, monetary easing from the central bank, and structural reforms. The aim is to boost Japan's economy. But experts are forecasting the Japanese economy to grow 0.9% this year, slower than the 1.5% last year. Rajiv Biswas is Asia-Pacific Chief Economist at IHS Global Insight.
Abenomics has actually failed. There was a lot of hype when he won the election about Abenomics, that he was going to somehow create a big recovery in the Japanese economy. And initially he used fiscal and monetary stimulus to boost economic growth. But now the fundamental reforms that were really needed to boost Japanese growth haven't really happened. He hasn't been able to deliver structural reforms.
Senior economist at Mizuho Bank, Vishnu Varathan, suggests some reforms.
One of the things they need to do is to get the labour market become a lot more flexible, which means that the pension schemes and the ability of younger workers to get employed and to create more business investments in tandem with this, so that we can put tax incentives aligned with payrolls as well. And given the aging demographics, getting more women in the workforce to get the participation rate higher.
The Bank of Japan offered a helping hand. In October, it raised the annual target for its asset buying program to 80 trillion yen. But by then, economic growth had already been hit by April's increase in sales tax to 8%. The tax hike led to diminished consumer spending and the economy falling into a technical recession. As a result, Prime Minister Abe delayed another tax hike that was planned for next October. Senior economist at UOB, Alvin Liu, says he's playing it safe.
Because on one hand, we've seen that the latest data for third quarter itself does show that Japan has went into a technical recession, and that the malice of the first GST hike this year, personal consumption itself, has been bigger and more lingering than what they initially expected. So if they had continued on with the next hike next year, it would have been a prolonged period of very subpar growth. So I think from that perspective, it's prudent.
But Bank of Singapore's chief economist, Richard Jerram, is disappointed by the move.
I think that delaying the tax hike is probably a mistake. I mean, if you wanted to have some short-term offset to support consumption while the sales tax is going up, you could offer some income support to lower-income groups. Of course, we have recently seen the Bank of Japan increase its efforts to support growth, and we've seen the yen fall around 10% over the last few weeks. So that should help to boost exports, boost corporate profitability, and support labour demand. And that's the sort of cycle they need to try to drag them out of this 20-year period of deflation. So it seems to me a little bit panicky from the government to be taking this type of reaction.
IHS Global Insight's Mr. Biswas says it's delaying the inevitable.
The fundamental problem is that its government debt to GDP ratio is already the highest in the OECD. So he's under a lot of pressure to make some kind of tax increases to stabilize the debt levels. So although he can postpone it, he cannot completely remove the possibility of a sales tax hike.
Next year, observers are expecting the Japanese economy to grow around 1.5%, with a weaker yen supporting exports. The Bottom Line is brought to you by Turkish Airlines, Europe's best airline.